Hello, everyone, and welcome back. Alrighty, this is part three, and we last talked about mutual funds and why they are an awesome way to get started making easy money on Fidelity. They are a safe option with a diversification of a multitude of companies, just like a bunch of ingredients on a supreme pizza. Now, I also mentioned previously that there are really three main things to focus on getting started making money, and that was stocks, ETFs, and mutual funds. I know everybody wants to jump into stocks, but ETFs are also very important and an awesome way to make money. There's a lot of information on Fidelity with all of this stuff. They could explain this way better than I can, but the main thing to remember is that stocks trade continuously throughout the day. So do ETFs. Mutual funds, on the other hand, that we talked about in the previous video, they do not fluctuate throughout the day. They only change once, and that's usually about 8 o'clock at night, way after the market is closed. ETFs, however, also have that diversification that we were talking about. We've got a whole list of ETFs here, and we're going to dig in on how to find this stuff. But the important thing to remember about ETFs is just like a mutual fund, you've got a combination of companies. It's not just one company. So it's still like a pizza, but they do fluctuate and the price does move throughout the day. So you can actually buy this at, say, 10 a.m. and then sell it later that same day at 3. And you're really looking at getting a profit based off of the change of the price. It's not really advisable to day trade ETFs. I mean, you could if something crazy happened, but they are sector specific. You can get into all different kinds of ones, just like mutual funds. This one is obviously electric vehicles. Tesla is the big one there. They've got industry specific ones here that you can get into. Clean energy. What do we else got here? Real estate. You can get into the bond market this way. Instead of directly investing into a specific thing, you can get a conglomeration of bonds. But you have the top here where you can go down to stocks, ETFs under news and research, right above mutual funds. And ETFs right here, very similar to mutual funds. Fidelity has their own brand. We can go ahead and open this up. We'll look at all Fidelity ETFs, and it pulls up 79 results up here. And these are just the Fidelity ones. There are other brands out there. But if we look at these different tabs up top, and I encourage you to just click on these and see what these are. This is a lot of information, but you can sort by the price percentage change today. Now, we've had a horrible market this last week, so these aren't looking very juicy. I know that, but you can start your research by at least whittling down a list of thousands down to what a lot of other people that do this full time have spent time and actually evaluating all the nitty gritty here. So ETFs are awesome. The main thing to remember is that they move like a stock, but they have the variety of exposure that a mutual fund has. It's kind of like the best of both worlds between stocks and mutual funds are ETFs. But here's a Fidelity Information Technology Index, ETF. Let's click on that guy and see what we got here. So again, now the top holdings, before they were down in the lower left, but it's an ETF. They move things around a little bit. But just like a mutual fund, you've got a pizza pie here, and you got NVIDIA, Apple, Microsoft, Broadcom, very similar to some of the companies we saw in that mutual fund. This trades like a stock. Now, are they going to be as volatile as stocks? No, absolutely not. But the golden rule of thumb is the more volatile something is, the greater the risk, but also the greater the reward. So depending on what you're trying to do, it's going to always vary on what vehicle you're going to want to jump into, whether it's an ETF or a mutual fund or a stock. Honestly, when they say the term diversify your portfolio, you should be having a combination of all three, in my opinion. So this steps it up a little bit more risk, but potentially greater rewards for things to move up a little bit. And they're industry specific. This is a bond, and you can see that it's compiled of different US Treasury notes. So this is going to be a little less risky. So we'll jump into that in terms of actually going through, buying one, searching for one, getting one, and all that. Most importantly, how it will look on your portfolio.